Spring has sprung. So are you considering purchasing a house because it's nice outside?
Yes, I love this weather.
And that's when everybody wants to purchase a home? Then let me tell you where you need to start first.
Shit, where do I start?
You need to start with a pre-approval. And it can be very, very daunting to be pre-approved, but I promise you, if you know what they're looking for and where to start and what to provide, it is that much easier for you.
Make it easy on yourself, I don't know.
So today, that's what we're gonna talk about in our video. Where do we start in the pre-approval process and what does that look like? Number one, let's start with your income. Loan officers are they have to know what your income is. Documentation that they are going to collect in order to get a better idea of that are 2 years of W-2s along with 1 month worth of pay stubs. Just another document that they'll also collect are your bank statements, and that's just to get an idea of the assets that you have to make sure that you do have some money.
You better not be wasting my time. You got money.
But definitely we want to start with verifying that you have an income coming in. Lenders want to see that you have at least 2 years of stable income. Can you have gaps in employment? Yes.
Yes.
Will they question your gaps in employment? Yes, depending on how far of a gap they are, but they need to see that you have 2 years of consistent income, that you haven't went from being a plumber to being a school teacher, or from being a school teacher to being a nurse. So they do have to verify and look into your income. And by all means, please do not job hop if you are thinking about purchasing a home, and definitely do not job hop.
Oh no, he's got himself a new job mending broken biscuits.
If you are under contract for a home. So first step in the pre-approval process is income verification. Number 2, let's just go ahead and discuss this now. We're not even gonna beat around the bush. Your credit score, it matters. You need to know what your credit score is. Before you start the pre-approval process, you should at least have an idea.
I have an idea
Of what your score is gonna be. But once you get connected to a lender, they are going to pull your credit. They could possibly do a soft pull so it does not show as a hard inquiry. But for the most part, they're gonna pull your credit.
Okay, but it's a fine one to leave you broke with bad credit and a hair weave you don't need.
Don't get mad when they pull your credit. They're gonna have to do that. They need to know what your score is. At minimum, a good score, an approvable score, a score that'll get you somewhere is a 620. Can they approve you for a loan or a pre-approval at a 580?
Absolutely.
However, at 580, you're considered more risky. So you may have to show that you have more money in reserves. And I know you're thinking like, well, if I had more money, I wouldn't be, asking for grants or asking for down payment assistance. I get it. Exactly. I definitely get it. However, at a 580, you're a higher risk. So you have to show more reserves. 620 is going to get you some down payment assistance.
I'm poor.
640 is a good credit score for you to get you anything that you may possibly want. So shoot for 620, but 640 and above is going to be great for you. Today, we are at Twin Rivers at Meadowville Landing in Chester, Virginia. And we're in the Element, which is a model home at H.H. Hunt out here in Twin Rivers. H.H. Hunt is one of the builders that is in this neighborhood. And I absolutely love the Element. Some of my favorite areas is this area that we're standing in now, actually, which is the covered porch. With the Element, it comes with a covered porch. Also, I love the fact that the home has windows all over the place. So it's so much natural light coming into the homes. And I also love the fact that the HOA dues pays for all of the yard work. Front and backyard are cut. Plants upkept. So you mean to tell me I don't have to cut grass? Love it. So if you are interested in coming out here to see these homes, then let me take you. Before you finish watching this video, don't even continue. I need you to subscribe to my channel now, please. Thank you. If you are looking to buy, sell, you want to move to the Richmond area, you want to become an agent, all of those good, you're going to see it all. I'm a mom, all of that good stuff. You're going to see it all. Subscribe. I want to hear the bing. I need to hear the bing. Bing. Subscribe. Thank you. Number 3. So we have checked the income. We made sure that you have the income. We've checked your credit. We see where your score is.
What's the score, Billy?
Number 3 is your debt to income ratio. Now, your debt to income ratio is calculated by taking the minimum payments
And the minimum basic skills test.
of your debt that is showing on your credit report. Not how much you pay on your light bill, not how much you pay for daycare, what your minimum payment is, not what you pay.
Have to pay.
If your minimum payment is $25 and you pay $100, we're going with the $25. We take the minimum payment of your debts that are reporting on your credit report and divide that by the monthly income, what the lender has deemed your monthly income to be. That is them examining your pay stubs, your W-2s, possibly your tax returns to determine what your monthly income is. And that gives you what is called a debt to income ratio. And depending on what that number is before they add in the mortgage, that's how they can determine how much of a mortgage that you can afford. So depending on your loan option, whether it's an FHA loan, a VA loan, USDA loan, or conventional loan, that determines how much your debt to income ratio can be. Some programs allow you to have a higher,
Much higher.
debt to income ratio, like I believe FHA goes up to 50%, and with certain lenders it may even go up to 56%. But USDA, which is the urban or the rural loan, they only allow you a max of 41%. So a lot of people like USDA because it's 0% down, it's 100% financing, but in the same sense, you're not able to borrow as much because your debt to income ratio, when you include the new mortgage, can only go up to 41%. So the third thing that your lender looks at with the pre-approval is your debt to income ratio in conjunction with the loan program that they are going to approve you for. Depending on your credit score, you may be approved. You could do FHA, you might be able to do conventional, you may be able to do USDA, just depends. VA, of course, is only for our veterans.
Well, Captain Forrest.
And active duty or retired military or disabled military. So that's a special program, but you may qualify for FHA, you may qualify for USDA, you may qualify for conventional, but your loan officer is going to help you to determine what would be the best option for you. And of course, for USDA, it has to be a specific area. It has to be in a rural area. And USDA does have a property eligibility map that you can put an address in, and it'll tell you if it's eligible for USDA or not. So, third thing is debt to income ratio. What's your loan program will determine how much that can be. Now, lastly, once pre-approved, you will receive a pre-approval letter. This letter will outline the max amount that you can spend, typically what an average payment may look like at that amount, what the estimated interest rate will be, what they're approving you for at that interest rate at that time. That interest rate does not lock you in. You're not locked in.
He got us locked in the house now.
Into that interest rate. That is just the interest rate that they're using at that moment, what you are pre-approved for at that moment. That pre-approval is good for about 60 to 90 days. After that, you'll have to re-up on your financial documents. So after 60 to 90 days, if you have not found a home, you will have to submit new documentation. So new pay stubs, new bank statements. Your W-2s will remain the same unless you're changing years, but new pay stubs, new bank statements. And if you need tax returns, then you may have to submit tax returns depending on where it is in the year. So your pre-approval is good for 60 to 90 days. Interest rate is not locked in until you actually go under contract. So just want you to keep those things and keep those in mind and take them into consideration while you're in the pre-approval process.
One more thing.
Please take into consideration some additional costs when you are purchasing a home. Yes, you're pre-approved. Yes, you know what your budget is, and you do not have to spend your max budget. I actually suggest you to go under what your budget is. So if you're approved for $400,000, you may want to spend $350,000. However, it's up to you. You do what you want to do.
Do what you want to do.
But you want to take into consideration that you may have to pay a down payment, which could be 3.5% of your sales price or 3%, depending on your loan option or your loan program, or it may be 0% down if you're doing USDA or VA, but take that into consideration. What is your down payment? You still have to pay closing costs. You may have to pay closing costs unless, you have a realtor that negotiates those for you.
What are you trying to negotiate?
But you may have to pay closing costs. So the closing costs are about 2 to 6% of the sales price. And there are upfront fees that you have to pay once you found a home. You have to put down what they call a earnest money deposit, which is basically like a good faith deposit saying, hey, you accepted my offer. I'm going to give you $2,000 to set to the side so that if I try to bail on this deal for no good reason, that's not lined out in this contract, then you get to keep my money. So you have to have an earnest money deposit. You have to pay for an appraisal of the property. You have to pay for a home inspection if you opt to get one. Home inspections are definitely optional, but I definitely highly suggest you to get one, whether it's a new construction or a resold home. Get a home inspection. So you want to think about some of the other costs that are associated with purchasing a home while you're in the pre-approval process. You can get very overwhelmed or excited about the fact, wow, I'm pre-approved. Then once we find the house and we start discussing the numbers, and then it's like, I didn't take all of those things into consideration. So you want to take those things into consideration while you're in the pre-approval process. I know that the pre-approval process may seem a little bit overwhelming, and I may have given you a lot of information at once. However, it's not as difficult as it seems. I promise you it's not. Take notes of some of the things that I've told you on today and schedule a consultation with me, and we can break it down a little bit further. But it doesn't have to be that hard. But before you start the home buying process, you have to get pre-approved. You have to know what your budget is, what you can afford, what you can't afford, because we can't go see houses that you can't afford. You have to shop within your budget. So if you desire to purchase a home this year, next year, some year, and you don't know where to start and you are looking for more information, then I'm your girl. I desire to be your realtor. You can reach out to me via email. You can reach out to me via DM. You can text me, whatever it is. However, send a pigeon. However you want to get to me, we can schedule a consultation so that we can go over the process, because I desire to be your realtor.